Alrighty. So I think everybody knows Coinbase here, right? But I don't think everybody's incredibly familiar with on the venture side. So let's start there. Like, kind of give me sort of the backstory of Coinbase Ventures, what you guys focus on, and kind of what you're excited about there.
Yeah, so we started Coinbase Ventures in the first part of 2018, just after the last crypto cycle. And the initial focus was really on helping develop the crypto ecosystem overall. When we started Coinbase Ventures, at that time there wasn't really very much institutional capital that was focused on investing in crypto startups. There was virtually no growth investors that were focused on crypto whatsoever. And we saw, while trading was really the primary use case at that point, it was really buying and selling Bitcoin, Ethereum, and a few other assets. We saw a ton of innovation that was happening outside of crypto, and we said, what's the best way for us to actually help support and enable that? Because as we view it, it's really a rising tide. As crypto grows, Coinbase grows, and the whole ecosystem benefits. So we started Coinbase Ventures. Fast forward to today, we've made just over 400 investments. Across about 45 countries, so it's pretty globally distributed, and we have a small but mighty team that's dedicated on all things ventures. So.
Nice. Yeah, I was looking at our fundraising screener the other day, and you guys are like top on allocated capital. So yeah, it's good to see. So what sort of sectors are you looking at that you're kind of most excited about? Like, is there anything that's like you're catching your eye of like, hey, this is actually kind of uninvestable, maybe underappreciated even too?
Sorry, underappreciated?
Yeah. What sort of sectors are you excited about, whether it's not incredibly easy to obvious? I think like infrastructure, we've been investing a lot in. What else is sort of like maybe doesn't get the limelight that you're sort of excited about?
Yeah, I think you're right. There's probably a lot of people who have talked about infrastructure, real-world assets, stablecoins, things of that nature. I think when we look at the development of the stack of what's required to get to what we think about as the holy grail, which is actual applications that millions and billions of users are using, we're at the place now where we have a lot of the foundational pieces in place. You have scalable protocol infrastructure, embedded in smart wallets, safe custody and key management. But if you move further up the stack, what we're starting to see now is a lot more robust application-specific software. So still infrastructure, but it's specific for things like crypto-enabled commerce. So if you're Shopify and you want to enable merchants to leverage crypto-based programs for engagement or loyalty or things like that, you need a service provider that's very, very much tailored to that specific use case. So small today, but that's an area that we're excited about and we expect to grow in the future.
So basically like kind of like this B2B software SaaS-y type deal, right? We kind of, let's say we got that base layer transactions down to like that dollar per transaction lower. And in order to make applications, developers basically need to stitch together tooling different. So within that, like, can you give me a sense of like how large is sort of that B2B market right now? Like, what's the size of the revenues? How many sort of companies are investing there?
Yeah, it's a good question. So we just recently did this analysis. You'll hear a lot of investors talk about market size, and market size obviously being very important for an industry like crypto that's really early. So what we did was we did a fairly robust bottoms-up exercise to estimate the size of the B2B software market in crypto today. We did it as of 2022. The results showed that the size was actually about $1.5 to $2 billion of spend on B2B software. And if you double click and think about like what areas that spend comes from, it's kind of intuitive at first. Most of it is core blockchain infrastructure, things like custody and key management, staking, on-ramps, things of that nature. And you'll recognize many of the companies in that space like Fireblocks and Coinbase Custody and others. But what we're starting to see is a lot more tooling, like I mentioned, that's tailored for DeFi, NFTs, commerce, loyalty, non-trading use cases that are still very early, but hold a lot of promise.
Yeah, and I think a lot of that promise is going to be based off the application layer, right? Traditionally, like B2B obviously derives its revenues from applications on top, right? And those applications need to have compelling use cases. Is that kind of a challenge that you see? Is really kind of because I think a good argument within crypto is that we haven't truly found product market fit at a lot of different application sizes. Is that like a challenge that like sort of keeps you up at night to a degree, or excites you, I guess?
Yeah, I think you can look at it in both ways, right? Like you look at it a little bit pessimistically or opportunistically. I I think the infrastructure, we talk a lot about like infrastructure phase, utility phase. I think that's kind of a myth, right? And other people have written about this, but they sort of go in tandem where the infrastructure gets to be at a good enough place that you can have interesting or compelling new use cases. So obviously, right now, the use case or the application that people are talking a lot about is friend tech.
Yep.
There's imperfections with that product, but there's a lot of really inspirational mechanics that are held within that application that I think are going to inspire new apps. And they sort of feed off of each other in a lot of different ways.
Yeah, I totally agree. When it started popping off, right, like the idea of doing a PWA app, kind of the key management embedded wallet, I think that's sort of a trend that we're going to see to continue on, because it sparks imagination, right?
Yeah, I think everybody in crypto is so used to the historical way of using a crypto app. You sign up for a wallet, you write down your seed phrase, you navigate to a dApp, you hit connect wallet, you fund your wallet with Ethereum so you can pay gas and all of that kind of stuff. And you think about it, is the number of users that are active on chain is actually quite small today, right? It's probably on the order of less than 500,000 users on a monthly basis. The next tens and hundreds of millions of users are probably going to pick up an app. It could be a friend tech. It could be something related to that. And they're going to have crypto assets, but they might not even know it. They're going to have a wallet on the back end, but they might not know it. But they can realize it at some point, or the game developer, or the developer, I should say, can introduce that utility to them and introduce a lot of people to some of the merits of crypto overall.
Yeah, I think we've always been saying this, right? We got to get the UX right. We got to get the UX to where like a normal person, your mom can pick up the app and like doesn't really need to know and click in these different pop-ups and all sorts of stuff. So is it kind of UX driven? Are you saying like, okay, our sort of central thesis is that, okay, UX needs to be a new paradigm, another step function up. Is that sort of driving your investment thesis at kind of that B2B SaaS level?
I think it's a combination of all the things. So I think the biggest change that I'd say is just scalable protocol infrastructure.
Okay.
Like a year and a half ago, you didn't have L2s or L1s or the ability to very easily access L2s or L1s. Once you have that in place and some of the core infrastructure, now you can start to do things at a more interesting scale for a lot of users. But you're right, like ultimately at the end of the day, what gets us excited about investing in companies that are helping developers build new blockchain-based apps is that there's going to be users who are using those apps, and they're going to be monetizing in those apps. That's going to drive a lot of the budgets for developers to purchase software, and ultimately, as an investor, that is what drives our returns.
So what in that stack there are you particularly excited about? Is it like sort of the key management stuff that you think is particularly exciting, on-off ramps? Is there something that sort of catches your eye that is maybe like a low percentage of the overall revenues right now that you see a lot more growth in the future? Yeah,
definitely key management. I think there's a lot of innovation happening right now, specifically at the wallet level and how users interact with wallets and hold their keys. We've invested a lot in a technology called multi-party computation, and we have a product called Coinbase Wallet as a Service. That enables third-party developers to embed wallets. I said this earlier this year, but I think by the end of this year, or hopefully 6 months in the future, like seed phrases will be a thing of the past.
I hope so.
And I think that's a huge friction point for a lot of new users to onboard into crypto. Beyond that, it's honestly a lot of maybe a little less interesting or boring stuff, a lot of back office stuff. Yeah. So we were talking about this kind of backstage a little bit, but two common themes that I hear a lot across this week is, one, there's a lot of discussion around what the regulatory environment is going to be, what the regulatory policies are going to be, and how that's going to impact early stage startups. Well, I think one thing that's a basic premise is that the burden that any company that's operating in the space is likely going to go up. That means that there's more spend, more budget that's allocated towards compliance-related software. So that's quite interesting for us. And then secondarily, we look at the entrance of traditional enterprises. So I mentioned Shopify earlier, but Live Nation or Ticketmaster, Budweiser, Coca-Cola, a lot of household brands. They start small, but as they start to touch and use crypto more deeply in their programs for whatever it is, they're going to need things to help them with custody. How do you track those from a financial perspective? How do you do transaction monitoring, real-time threat protection, things of that nature? So I would say compliance, security, risk management's the other area.
Yeah, I think that's actually a pretty good insight, right? Bill Gurley had that talk just the other week of institutions like the incumbents basically benefit from the regulatory capture, if you will, and that sort of just drives more spend onto sort of tooling and stuff like that. So what, I guess, maybe just dig another layer deeper. Like what specifically is it on, I guess, different custody? Is it, what sort of, is it on the institutional side that you're excited about there? You know what I'm saying?
From a compliance perspective?
Yeah, yeah.
Yeah. Less on the institutional side. I think, particularly for like even DeFi platforms right now, there's a world in which there's a lot of discussions going on. Like, can a DeFi platform even have a compliance program? I think the answer is no. But a lot of that burden will ultimately fall on companies like a Coinbase. But you can imagine new brokers like a PayPal or a Nubank or others that have to build crypto compliance programs to meet some of these new regulations, and those are really, really big potential customers for a lot of firms.
Totally, totally. All right, so what are the big challenges of investing, I guess, at this B2B layer? Is there anything that sort of stands out to you as like that's a tough nut to crack?
Yeah, I think the biggest one is the go-to-market. I think the common conversation that I have with a lot of founders is, do we start by selling to crypto startups or crypto native startups because they get what we're doing? It's a short sales cycle. We can put some wins on the board, get logos. But they know that it's really difficult to scale revenue, right? Like that you just count the number of logos that you have to close in order to get to 10, 50, $100 million of ARR. Or do you start upmarket with the larger brands, but there's long sales cycles, there's a lot of education that needs to go into that. And that's a pretty tough dilemma, I think, for a lot of companies right now that are thinking about how to navigate it. I think what we see people being successful with is starting down market, and but you also starting to plant the seeds with larger enterprises. So there's certain firms that have shown a affinity towards crypto. So I mentioned some of those brands like a Nike and others, starting to build those relationships early, but ultimately penetrating that quote unquote enterprise segment is really important for raising those subsequent rounds.
Yeah, no, I think that's interesting. I have seen like the same where you kind of start with the crypto native, because like it feels like the crypto native protocols just sort of understand crypto, right? They come in with the app features that they kind of know what they need. Some of these big enterprises might not know exactly what solution they're even trying to build anyway, so it's just a little easier to be crypto to crypto, if that makes sense. So how do you see it more evolving? Is it kind of sort of, is it going to be the big apps sort of be at low scale, or do you think kind of a Coca-Cola or whatever it is, Nike, can actually do something particularly exciting there?
I think it's going to be a little bit of both. I'm actually pretty excited about the latter. I think everyone focuses on the crypto native startups, which makes a lot of sense. It's really important to have your initial design customers. But what we see as Coinbase is that there's a ton of interest from Fortune 100 companies. We recently did a survey, and over 50% of Fortune 100 companies expressed that they had a Web3 initiative or a Web3 program that's already in place. Those are going to come over time, but you kind of look at lessons from past cycles, and if you rewind to 2017, we used to always talk a lot about like institutional crypto and when was that going to happen. And it was 2017, 2018, 2019, 2020, and then all of a sudden there was a flood in 2021 where a lot of corporates were buying Bitcoin or buying crypto assets, holding it on their treasuries. And I think now we see interest from a lot of corporates that are thinking about, well, hey, how do I integrate crypto as a mechanism to better engage my customers or get more data about how my customers think about and engage with my brand and use that for retargeting and increasing my customer LTVs. So we're really excited about that path. We think that creates a lot of opportunity for early stage companies. And I mentioned before, this analysis that we did showed crypto software right now is, at 2022, is about $1.5 to $2 billion. Total global software spend is around $800 billion. So that means you could look at that one way, right? Like tiny, that's less than 25 basis points of overall software spend. And that means the space is small today. On the other hand, we think that that's a pretty good sign that there's a lot of opportunity in the future. If you just assume 1% penetration, then that's a pretty significant amount of growth.
No, I see that. Yeah, and I do like kind of the institutional side. It does feel like it's growth, and it does feel super early. I think like a good example I like is Nike. It's not just on kind of the compliance side of things, but expanding into new markets too, like where the artifact acquisition and sort of like putting shoes into video games and stuff like that. I think that's like an exciting sort of area. But sort of, how about we take a spicy take? Like looking ahead, like what do you think is maybe overstated right now that you sort of think is, just overplayed, if you will? Give me something spicy.
Something that's just generally spicy?
Yeah, looking ahead, right? Where's your...
Yeah, I think, we look at a lot at funding markets and how much companies have raised and when they've raised. And as we approach the end of 2023, I think a lot of companies raised at really high valuations in 2021. And there's a lot of money that's gone into the space, and not a lot of companies that have really found a good sense of product market fit or how they're going to show those monetization levers for the next round. And so when we think about it from a bigger company's perspective like Coinbase, I think you're going to start to see a lot of consolidation over time. That could be very healthy. There's companies, like Alchemy or Fireblocks, a lot of these late stage private companies in the space that have very highly valued equity. It's very valuable from an M&A perspective. And I think a lot of those companies are going to take advantage of these cycles. It's a playbook that I think Coinbase employed in the last cycle, and a lot of other people will look to do in this cycle.
No, that makes a lot of sense. It's kind of just the nature of how things tend to flow. Okay, not that spicy. So let's kind of on the consumer side. I think to me, like for the B2B SaaS to grow, we talked to someone on the compliance side. That's obviously a key driver. I think just that organic growth of like kind of a consumer app. Let's take FinTech for example. That's sort of really driving the embedded wallet conversation. Is that like incredibly necessary? And where do you think that has to happen? Does it have to happen on the social side? Is it gaming or something? Where's that sort of application demand drivers that you see?
Yeah, I think it can happen anywhere. I think social is definitely like front and center right now. And if you look at the interest and the engagement that you get, not just on FinTech, but like on Farcaster or Lens, like that's clearly, there's something there and people are starting to see it. But I think it could also happen in other verticals. The other area that I think we're most excited about seeing it is in gaming, where embedded wallets are really critical for any Web3 game for the most part. So it's not just embedded wallets, but also smart wallets and being able to sponsor gas, sponsor transactions, and really abstract away a lot of that complexity for the end user is really critical. Yeah,
totally agree. And there's other aspects too, right? The on-ramps, off-ramps to me is one thing I'm particularly like, money's got to feel real, right? I mean, you could be on FinTech, you can making your money, whatever, but like, you got to get your money out at some point. Is that like also an area that you've got like strong feelings on or what?
Yeah, interesting. I actually think that space is fairly saturated, like overly saturated. And you look at a lot of the on-ramps as a service businesses that have started, I think they've grown pretty significantly as transaction volumes have grown and as demand for new applications to have direct fiat on-ramps is there. But ultimately what we see is that for those that don't expand into offering other products, so ultimately and offering their own first-party or third-party services, the margin profiles ultimately trend downward. So I think, most, if you look at like a major front-end customer, like a MetaMask or even a Coinbase wallet, most customers will integrate many fiat on-ramps at this point, or even a third-party aggregator, and just optimize based on price. So,
because you don't own the customer, it's hard to have the pricing, right? And if the wallet really has that customer relationship, it's just hard for the ramp, I guess, to have the pricing power. Is that something you sort of break down? How do you think about what's investable kind of at the B2B SaaS layer, right? Because on one hand, it could be valuable, whether it's on-ramp, off-ramp, but not exactly collect a whole lot of value, if you will. How do you sort of think about that?
Yeah, I think about it from like a hierarchy of needs perspective. And the hierarchy of needs determines near term versus longer term. So like if you're at the base level, what you need is you need a scalable protocol, you need custody and key management, you need those things. And I think that's large part of the reason why you see a lot of the monetization there. So when you think about like near term, the areas that we're excited about, I mentioned compliance, security, risk management. Those are essential for any financial services firm, any large-scale neo-broker or brokerage to offer crypto-based services. So we think that's like more in the near term. Now, I think as a longer-term investor, especially because we invest mostly at pre-seed or seed stage, we think about further up the stack, some of those services that are enabling unique NFT-enabled applications, commerce-based applications, and you just have to have a different time horizon and expectations around like what that time horizon looks like when you're making those investments.
It makes a lot of sense. I mean, I think that's something that gets lost on is just the time horizon. Too many people are sort of talking about and just
yeah. We talk about it a lot, right? Like on the face of it, any investment can look like a good investment over a long enough time horizon. So that's really difficult to predict, especially in such a cyclical industry like crypto. But a lot of the things that we talk about, like you notice these trends that we talk about, real world assets, they're not necessarily new. People have been talking about these things for 5, 10 years. Yeah. But they didn't work back then for one reason or the other. And that's why I think the ecosystem overall develops together. It's a little bit of a push and a pull between application developers, infrastructure providers. Yeah, overall, like time horizon is pretty significant, and it's an imperfect science, but we try to do our best to estimate what's near term versus longer term.
Yeah, I totally agree. All right, well, we got maybe just a couple more seconds here. What do you leave us with? What you're most excited about for the next coming months? Yeah,
I think right now I'm just most excited about the innovation that I see in the crypto UI layer. Just like I mentioned, is just people using crypto-based apps and not knowing that they're touching crypto. Yeah. Brands like Starbucks that integrate loyalty programs that are NFTs on the back end. I think it starts with relatively benign. People are holding crypto assets. They don't know that they're holding crypto assets. And then all of a sudden they realize, well, hey, there's actual like value or utility that I can get from these things. And I think that that has the most potential to get the next wave of users into the space. I really hope so, because I'm kind of sick of talking about trading use cases in the industry. So
yeah, we can only trade each other's money back and forth for so long, right?
For sure.
Yeah. All right. Well, thank you. This has been a great talk.